Well, welcome everyone to today's webinar titled Staying Ahead, Protecting Banks and Corporate Clients Against B2B Fraud. This is Brian from Strategic Treasurer, and we're pleased you could join us as we consider how to prevent criminals from harming both banks and their corporate clients by building a more robust security footing. Our speakers for today are Nithai Barzam, CEO of nsKnox, and Craig Jeffery, founder and managing partner of Strategic Treasurer. Welcome, Nithai and Craig, and I'll now turn the presentation over to you.
Thank you, Brian, and Nithai, it's good to present with you today.
Same here. Thanks, Craig.
I know we're 6 hours different, and so thank you everybody for joining. Whether you're in Asia and it's late, whether you're in Middle East or Europe and it's very late afternoon, or you're on the East or West Coast and it's morning or early morning, thank you so much for joining. There's a lot of things you could be doing. We are delighted you're spending some of that time with us. But today's topic, staying ahead, protecting banks and corporate clients against B2B payments fraud, is our topic. There's a lot of good material today. Let me set the table. Let me lay out our agenda for our discussion today. First, we'll begin with payment fraud. The listing says areas of vulnerability and realities of fraud. We'll look at the playbook that criminals are using, as well as the points of vulnerability that each company and each bank has in protecting payments. We won't look at everything, but we'll look at the landscape there. Then we'll move to incoming and outgoing payments. This is the idea that it's proper to think about outgoing payments as well as collections or incoming payments when we think about protecting our cash and our flows, instead of just on the outbound side and ignore the inbound side, or just focusing on one side. We're going to look at both in today's discussion. Then we'll look at security documents. This idea of that there are documents that are used to help protect payments. As we have experienced fraud and there's a letter, please send a letter from your bank that shows what your banking information is. That's built to protect our accounts and transfers. Criminals are coming in trying to copy, mirror those, or remove a layer of security. So we'll look at securing security documents or securing some of these change documents and why that's important. And then we'll discuss payment security platforms. Rather than just focusing on discrete solutions that solve one issue, we'll look at the idea and the concept of platforms that provide a range of features and security activities. And rather than just something that's sent, it's a place that can be queried. And that's a fit certainly for what nsKnox does. On electronic positive pay, the next gen defense, most people are in the US are familiar with check positive pay, or the next version, pay match positive pay. And on the electronic side, there are things like electronic pre-authorization where a code is used, or even to sometimes specific payments. But this is looking at the next level of defense for that, confirming that what was paid is what was sent and what was matched follows. So it's a full end-to-end look at that as we look at stepping up the defenses. On the key takeaways, we'll look at evolving fraud and a range of other items, including technology design, collaboration, and fraud on others. So there's certainly a lot of material we're going to cover, and we will get into it. So first, we'll start with the criminal playbook. Nithai, as we look at this, criminals want to take money or spoof or fool people into sending money. We'll look at what they do with data. I guess the other thing we didn't put on here that's certainly part of the criminal playbook is criminals try to remove security layers to steal funds. But maybe you could take us into the theft of money portion.
Yeah, sure, absolutely. So obviously, none of us want any money taken from us, let alone stolen. And unfortunately, this can happen multiple ways. It could be that outsiders and cyber criminals and fraudsters are trying to take your money, or it could be that bad insiders are the ones that are manipulating data within an organization, operational or financial systems. So multiple way taking your money can happen within a corporate environment, but also through a bank's online portal or online banking system. So some examples for that would be a bet insider that bypasses control. Nobody likes, to talk about these, but unfortunately, if we look at some of the statistics, PwC estimated as an example that 50% of economic crimes are actually conducted by or with the help of bet insiders. So should definitely take that under consideration. They can, use or steal credentials. We're all familiar with how the username and password oftentimes is on a sticky note, on the table. Definitely be careful with that. Compromising internal communication, emails going back and forth could contain fraudulent details. But, not just insiders, outsiders as well. Credential theft, one of the biggest things out there. In fact, some surveys performed identified that 2 of 3 companies have admitted that, their ERP system was accessed remotely. And every bank that I work with posts these messages saying, be careful sharing your credentials and, be careful from that. Malicious code could be used by cyber criminals to manipulate data in an ERP system or payment files. Bottom line, multiple ways where data in your system or your credentials can be used to just take your money, send it into fraudulent accounts.
Yeah, excellent. Thanks for that. And so, in addition to stealing money directly, data is valuable. Data can be stolen and sold, or it can be locked up for ransom. I don't think it's been several months since I've received one of those letters that says your data was likely compromised on this system or that system. So maybe we've entered a 2-month period, or we'll find out 3 months from now as I get 4 more letters. But we've all seen how criminals are stealing personal data, company data, selling it for other criminals to, act on that, whether it's health information, banking information, payment information. The locking up data for ransom, is usually done in concert now, where some data is put out on the web, and the threat is we'll share more of it. So, we really did steal some of it. And then you have to pay to hopefully get your data unencrypted, that's been encrypted on the hard drives, on the backup servers, etc. So those are some of the most common plays in the criminal playbook. The other one, which I mentioned at the beginning, is they try to remove security layers. They try to compromise the different security layers that exist. And we'll see that time and time again from confirmations that are sent out from banks, controls that are established, going back to getting in the middle of anywhere they can redirect payments. And we'll look at that from an area of vulnerability perspective next. So I'll set the stage, and then Nithai can go through this in some more details. Where are the vulnerabilities? Every place where data is stored, every point of handoff, and this is where they need to be looked at. On this chart, I'll just show you, we have the security offered by fintechs, and then we have security offered by banks, information that is protected within the banking system. But each point, you're putting a beneficiary into the system, or your ongoing changes to master data. Hey, we have a new bank account. We want you to send information to a different place. Getting involved in when payment files are sent all the way to the bank side. There's a significant number of areas of vulnerability. You may hear the surface area of attack from a system perspective, or every time there's a point of handoff, that's a point of vulnerability. This is the area where we have to be practicing. We have to practice a security mindset. Nithai, I know you had a few things to jump in on this.
Yeah, thanks. So, one of the first approaches that everybody's concerned with, of course, is social engineering. So all companies that I'm speaking with have a process when they onboard beneficiaries or when they process requests to modify banking details, some sort of a process. You know what, maybe 5 years ago, I would still talk to companies who would just trust the details coming in email, but nobody does this anymore. However, some companies only have manual processes, so it's about document review and about trying to confirm details over the phone, and we'll probably discuss some of these as we progress through the session. But who's making the calls? Typically, the lower paid employees. It's a very frustrating job. It's a big problem. Very hard to do that. The other issue to take under consideration is that as organizations start to adopt technology, they implement layers of security, and sometimes only partial solutions are available. And this is something we need to be aware of and concerned with, because it may create a false sense of security, right? If you have a database you could look into and validate, I don't know, 30% of your accounts, but you get used to unknown 70% of the times, then that's going to be a big problem, because you're becoming complacent. And obviously the fraudulent accounts are the ones that are not in the database. When you look at master data, this is what's known, in technical language as data at rest. It just sits in your ERP system waiting for you to be used. And the one thing we should all be aware of with data at rest is that there's time to manipulate this data. And because there's time, both insiders and outsiders have time to plan it, have time to cover their tracks. And so when we talk about validation and security layers, we need to understand this needs to be kind of like an ongoing process, continuous process, not just, okay, I verify details and register them on my ERP system and I'm secure. Take it downstream, we're sending instructions to the bank. Two interesting things to think about that one. Number one is everybody is investing in making sure that the communication is secure between banks and their clients. However, are we actually looking at the data itself? Because if we have problematic data in a payment file and we very securely send it onwards to a bank, then the bank will process fraudulent data. There's no way for them to know that. This is why everybody's trying to look for real-time global account validation, but something which is so hard to accomplish. So bottom line is, you talk to fintechs and they'll provide solutions that can help you within your corporate environment. Try to talk to the bank. Most likely there'll be kind of like using rules and anomaly detection, which could be again very problematic because of false positives. Every time I pay a new vendor is the first time, and if I need to authorize each of these, it's gonna be, for large corporates, a huge task. So automation and collaboration would be key here in closing the loop between banks and their clients.
Yeah, thanks. And as if everybody turns their attention to the poll question that should pop up on the screen, maybe it's behind some other item you have there. It's a select all that apply response. So which types of business-to-business fraud are a significant concern to you or your company? So if it's a minor concern, don't check it. But if it's significant, please check it. So business email compromise, check fraud, deepfake, all the way down to internal fraud, or maybe something other, or you're unsure. So go ahead and select that and hit submit. We'll give everybody a few moments for that. So if you've completed that and submitted, if you would go ahead and follow nsKnox on LinkedIn. If you look in the chat box, you can see nsKnox, you can see Strategic Treasure. Please go ahead and click on that and pull it up and follow our companies to keep the conversation and dialogue going. That would be most excellent. Marketing teams love that. All right. Also, as we look at this, what are the top concerns? Business email compromise, number one. ACH wire fraud, number two at 64%. So 73%, 64%. Check fraud, 53%. So we have a number of people from the US on for sure. Deep fake, almost 40%, 39%, followed by credential theft and then internal fraud. Pretty significant list of concerns. I don't see I don't see any that are under a quarter, right? Internal fraud is still 28%. So this is a tough environment, Nithai.
Yeah, and I think it's only getting worse, unfortunately.
Yeah, for sure. So thanks everybody for answering that. If you would like to see the results of all the poll questions in the chat box, if you would type nsKnox, NSKNOX in the chat box, if we have 125 people type that, we'll send it out to everybody. That'll be embedded where it says poll question on our slides today. That's where the poll answers will be. So you'll be able to get those. If you love data like we love data, you'll type nsKnox into the chat box. It's also a good, I guess, where you could type in the Q&A box too, as I see some people doing. But let's move on. I think from that other poll question, certainly those who are on today's webinar are heightened to fraud, right? Why would you attend a fraud-related webinar if that wasn't a big concern? But as we look at this, corporates and banks are vulnerable. 3/4, 73% of corporates experienced or suspected fraud had occurred. I don't see many studies that are less than 70%. They're all in the 70 to 80%, and it's probably higher, but not everybody's aware of all of the types of fraud that may have occurred. So that's a significant start. Every company is at risk because criminals are using automation. It's rolling everybody up. You can't just say we're small, nobody cares. Well, they may not care to go after you specifically, but they use tools to get after everyone. So it's a significant risk. Everybody on this webinar, I believe, knows and understands that. But let's go through a couple case studies. Nithai, why don't you take us through a couple of the, let's just say, deepfake and the Ray-Ban case?
Sure thing. So two very interesting cases, and I think examples to a phenomenon where fraudsters are actually trying to compromise the connection between the corporate client and the bank. So when we say, both corporates and banks are vulnerable, not necessarily targeting the bank directly, of course they do. The banks invest huge amounts of money in, cybersecurity solutions and so on. But in both these cases, it's actually the connection between corporate clients and the bank was compromised. So the first case involves a branch manager in a bank receiving a phone call. Caller ID is the caller ID of a director in a company that manages funds with a bank. When the call is answered, the speaker sounds like the director and the company, and I guess everybody is figuring it out by now, but everything was fake, and using deepfake AI and phone hijacking. A phone call from a fraudster that sounded like the director to the branch manager took place, and injecting some sense of urgency, as fraudsters typically do. They said they need to make a transfer by noon of $35 million for a company they're acquiring. Everything was accompanied by fraudulent emails as well. So not just deepfake AI, but also business email compromise, like the complete social engineering package, if you will. And $35 million later, client funds were transferred by the bank. So not good, not for the bank, not for the client. It's going to take time, forget responsibilities and such. Not a great incident and something to be aware of. The second case, I think, is interesting, and obviously everything I'm saying here is from stuff that's available, in out there online and in the media, not actually part of this case, but according to what's available online, Ray-Ban has sued their bank, JP Morgan, for quote unquote losing $272 million. Again, based on the information available, it seems that a bit insider collaborated with others, third parties, outsiders, criminals, to steal credentials of yet another employee. And the two sets of credentials were used to inject fake transactions through the online banking system. So proper credentials were used with proper signatory rights, but it turns out that none of these transactions was actually approved and confirmed by Ray-Ban. It is an interesting case. I'm, not sure that, that JP will be found, guilty of anything here, but it's interesting to note that a New York judge did not dismiss the case and said it will go to court. There haven't been updates on that for quite a while now, and it'd be interesting to see the outcome. But I can tell you, Craig, that I'm speaking with banks all around the world, and it seems like certain regulators in Australia, as the example may be, the sentiment of the media and definitely clients are looking to their banks, to do more in terms of protecting them and not just rely on signatory rights and credentials, but also on verifying the actual details and transactions. So I think these two cases are kind of like a change in fraudster behavior, the evolution of stealing emails into sophisticated business email compromise, and nowadays into deep fake and, insider fraudster collaboration and the connection between corporates and their banks, which we're starting to see more and more.
Yeah, payoff of $20,000 or $200,000 may not be worth it for the amount of effort that goes into some of these, but it's becoming easier, and the payoff is in the tens and hundreds of millions.
Absolutely.
Yeah, so it's certainly making a difference. There's a question in the Q&A box. We'll cover that before we move on to end-to-end security. It said, this is from a banker. It says, I've seen requests for SOC 1 and SOC 2 reports from my clients. Can you speak to the contents of these types of reports and how they protect or inform the client? Will these become more prevalent in our digital environment? So a couple real quick things on this, because this would be a little bit involved. SOC 1 and SOC 2 reports are reports where there's an independent assessment of the controls, and there's some different levels on those. We'll let people look that up on what's included in each of those. I don't necessarily see these as super valuable for banks. Banks are heavily regulated. They're being reviewed at a systematic level. So it's a little bit more challenging if it's a bank provided service. If it's done through another party, I could certainly see how that would make sense to include that. This provides, instead of every company doing due diligence and reviewing this list of security questions with whoever they're doing business with, and let's say they have 50 customers, 50 people going in and checking this, they rely on an outside report. Will this be more prevalent in our digital environment? It will be, I believe. It's continued to increase in importance as part of the due diligence. I don't know that it'll be much more prevalent in the banking sector, because they're usually regulated by several different sources. So thanks for that question.
I can tell you that in the corporate environment, a lot of internal auditors and stuff are interested in these type certification, as it pertains to, a solution provider's ability to ensure compliance with, data security, data privacy, software development lifecycle, and so on. Which means, okay, they can help me protect my money, or they can process transactions and this sort of stuff as well.
Yeah. So, yeah, thanks for the question. Thanks for the additional color on that, Nithai. And from an end-to-end security, this is, when we say end-to-end, or both sides, right? We're making payments, we're receiving payments. Both of these need to be protected. And I'll take the macro view and let Nithai cover the dotted or dashed rectangle in the middle. Outgoing payment security and incoming payment security, we know there's things like filters that the banks allow, blocks, there's pre-authorized ACH, there's specialized accounts that you can see and detect information. The clearinghouse offers UPIC with a number of banks, which is a identification code where money can be sent in via ACH in the US, but no money can be taken out. There's no debit. You're not sharing your ultimate bank account, and therefore it's protected. So you can share that information freely without worrying about someone perhaps using that to generate checks or some type of debit. And so those are some of the broader services. Your banks offer a lot of services. For the corporates that are on this, when they offer security services, your default position should be, I think I will take it unless there's a really good reason not to. They're not offering this just for fun. It's to protect their clients, because if you're protected, that makes a better client, and that saves a lot of uncomfortable conversation. So today's focus is really on that middle section. And Nithai, maybe you can highlight a few of those.
Yeah, absolutely. And I think first it's probably worthwhile to mention, why are we talking both on outgoing payments and incoming payments? Because everybody's instinct is kind of like, I want to make sure that when I pay money, it doesn't get lost, right? But interestingly enough, and I always ask people, what do you think happens more, outgoing payment problems or incoming payment problems? And obviously it's the same number, because, one person outgoing payment problem becomes the receiver's incoming payment problem because they never received payment. And nobody likes to miss on $1 million payments they were expected. Impacts the cash flow, and what if it's actually the receiver to blame, then maybe they've lost the money altogether. And that's why we need to consider this on both sides. So if we go back, for a second there to the areas of vulnerability that we've discussed, essentially they were aligned with, on the outgoing payment side, with kind of like the procure to pay fuel cycle that every corporate has, right? You onboard your beneficiary or you're processing banking details. This is where you must have, account validation. And if you're transacting globally, then you want to have it on a global basis. The ability to confirm account ownership for every account anywhere in the world. Once you've stored it in your ERP system, let's face it, it would be a real bummer if, for any reason, bad insider, cyber criminal, malicious code, or what have you, data is manipulated, which is why you want to make sure that your master data is secured on an ongoing basis. And likewise, if anybody or anything manipulates data in your payment files before you've signed them and send them for processing, then you're going to end up a fraudulent account regardless, which is why you want to be looking at verifying your payment transactions. Oftentimes, everybody is looking at payments, through the, are they justified lens? Kind of like, did I receive the goods or service? Is the dollar amount matching the PO? Did everybody sign off on that? And rarely will people look at, am I paying the correct account? And this opens the door for, a lot of problems due to fraud or errors. On the incoming payment side of things, kind of like the reverse of that, I want to make sure that when I get paid or expecting to get paid, my clients and business partners, they don't get defrauded and they have the correct banking details for me so that they can pay me. And the best source for this type of information would be, the bank. So if Nithai has an account with, I don't know, Bank of America, um, and Craig, I would like you to pay me. I know you wanted this to be in reverse, but that's the example that came into mind here. Then I want to make sure that you have my correct banking details. And in this example, Bank of America would be the best source for you to figure this out. But will they provide you this service? And what if you were paying China or anyone else? So the ability to register your accounts, the ability to have documentation that is verifiable and on the issuing bank's portal is going to be key to maintain this type trust, and in a way solve the account validation problem in reverse. If everybody used, verifiable credentials, that would solve the problem.
All right. So payment security platform, the difference between a single solution or a single activity to a platform, a way of looking at how flows of information and security stays current, from end to end. If I maybe you talk to us about a secure and verifiable bank letter, the idea that you're making a payment, you're requesting to make a payment, and you want validation that you're going to get the right account information. Banks provide letters, and people try to remove those letters. Maybe you could talk through.
Yeah, I guess the biggest problem with bank letters is they're typically simple PDF documents that can be easily forged or manipulated. And so anybody receiving these needs to validate them, which becomes a process on their side, and also on your side, the person who provided the bank letter. And a verifiable bank letter would introduce the concept of verifiable credentials. Like when you travel abroad, you don't expect somebody at Heathrow to make a phone call to the US and ask to confirm your identity. Instead, you travel with a passport. So think of a secure and verifiable bank letter as a bank account passport, which you can check and verify that the details in there are indeed correct. That would be the concept of that one.
I like the passport idea. So the next couple things I'll jump in and then ask Nithai to make comments. So the next gen or the next generation of positive pay for electronic payments, how do we move from, like in check world, there's positive pay, which has the amount and the check number, to the next generation of regular positive pay was including payee information. So if someone tried to scrape off who was being paid, there would be a problem because now the information wouldn't match. And so people tried to, add some additional text for who's being paid. On the electronic side, it's, you can set up a code. If someone gets the code and they can submit that to the banking system, that could work. You could do electronic pre-authorization on the ACH side for specific amounts. But how can we make it so that there's a validation of what is intended to be paid matches, let's say, with the underlying system? Once the system generates a payment file, it gets forwarded, moved through the communication platform to the bank. And if there's some validation or confirmation that the file is for this much value and these many items, what's the protection that nothing is changed in that? And even if nothing is changed and it's hashed properly and totaled properly, how do we know that that matches what's in the underlying system? So next generation positive pay for electronic payments looks more at the end of the process back towards the beginning to do confirmation for that. Electronic pre-authorization, I think most people are pretty familiar with. In the US, it's an ACH system. Sometimes there's different names for it, but you can set up, allow people to debit your account or provide authorization or validation on a item by item basis or within a range to particular numbers, like particularly with tax authorities, you might set up electronic pre-authorization. Everything works great until the taxing authority changes their code, and then it fails, and then you get dinged for a problem. But those are some of the elements there. On the global account validation side, solving account validation on a country by country basis can work okay if you're in one country, but more and more companies are highly complex. They're in and making payment to many, many companies. So having a process where there's a confirmation of account information start to finish is a good way of providing protection. Nithai, I thought you might have more on global account validation or on the platform side of things too.
Yeah, so maybe to touch on the global account validation, I think first we need to define what account validation means. A lot of people use the term validation, and my advice to the audience here would be to first understand, when speaking about validation, what is it that we're validating? Because if it's, for example, the fact that a bank account number has the proper format, the SWIFT BIC is legitimate, or the IBAN is good, is not really helpful in terms of sending your funds to the wrong place. So first, let's ensure that when we talk about account validation, it really does mean I'm verifying the ownership of that account validation. And the second thing I'll say here is, are we just confirming the name? Are we looking at tax ID name combination? Are we looking at addresses, at countries? Because you could have same company names, in different states with different tax IDs, different countries altogether in the same bank. So when we look into things, I would advise, everybody to dig a bit deeper into what validation means. And then since it starts with the word global, I'll stay a second there and say it's very important that companies are able to validate account ownership everywhere they transact. So I'll go back to the example I gave before. If you're getting used to unknown or no data available, it's a problem, which is why you need to be able to do that, kind of like the 100% coverage. You need to receive deterministic answers, because otherwise you get like, we think it may be all right, but you're left off with the manual validation. So pay attention, would be my advice.
Right. That brings us to our second poll question. I am told we need 17 more nsKnox. Comments in the chat box. Security measures. What security measures does your organization currently use to protect against payment fraud? And so select all that apply, from multi-factor authentication, a fob or a code, positive pay for checks for ACH, all the way down to we need to improve our fraud prevention measures or unsure. So we've got a number of items there. Go ahead and slip those in your answer and then hit submit. And we have enough. We have enough nsKnoxes in the chat box. And I think, Nithai, sometimes people like to separate NS and Knox. Some people put it together. It looks like it's in the logo, they're together.
Yeah, but I think you'll be flexible here, accepting whichever.
We will not reject any of those. I'm mean, but not that mean. All right. So, Nithai, as we look at this, I think all the bankers in the room would say, why isn't 100% for multi-factor authentication? Bank account validation, 43%. Employee fraud awareness training, 2/3. And 10% freely admit we need to improve our fraud prevention measures. Any thoughts? Any comments?
Yeah, I'll say I'm a bit surprised, to be honest, with these results, because I would have expected that by now more people would implement more measures, if you will, understanding the magnitude of the problem, which has been out there for years. And just like you're saying, multi-factor authentication, is not going to solve all the problems, and we've seen how even with multi-factor authentication, fraudsters gain access and get the other factor and so on and so forth. But really, I think this is fundamental, and everybody should adopt that. The numbers for positive pay are interesting, because a lot of people think that they're important, but some statistics around usage show that there's a lot of room for improvement in terms of the adoption of that one. And the one that really puzzles me is only 43% have implemented bank account validation services, which means that, all the others are stuck with manual validation. And I'm assuming nobody just takes details they receive over email or over the phone without validating, which leaves a lot of our listeners exposed here to some serious fraud cases. And, it doesn't feel as bad when you read about it, when you hear about it, but I think if you experience this, it feels extremely bad. And we've seen incidents at the millions all the way to hundreds of, and this could be devastating for a company. So I would really want people to consider and reevaluate, and it's a continuous process. So interesting results, I have to say.
Excellent. Now let's turn to the traditional bank letters and then a bank account or a validated bank account letter or certificate. So this, on the screen, you can see here's the Bank of Bravos. Here's the letter that shares the banking information. And so companies ask for that on bank letterhead to provide a greater assurance. And these can be forged or altered quite well with very inexpensive or free tools to do that. And so this is the traditional bank letter. It's a layer of security, and we have to protect that layer of security. This is not easily protectable. It's behind. And so I'll jump to the next one. Nithai, you can comment on this one and the idea of a bank account certificate, a validated, verified letter.
Yeah, so we've briefly touched on it before, and I'll say this, right? That the two main challenges for the traditional bank letter are it's really easy to forge, and as a result, there's a whole validation process for the details that follows the receipt of any of these, which requires the same manual stuff we've talked about before. It burdens the account owner because now they need to answer calls, they need to get on video conferences and confirm their details, they need to supply additional documentation or what have you. Bottom line, it takes them a lot of time to be onboarded as a client and to get paid. In turn, if we adopt the concept of a bank account passport, what we have here is a document that carries, if you will, its validation with it. And so in order to view the information, you verify it, and you do that on the bank's online portal. And again, if the Bank of Bravos is the one we're talking about, and you want to pay a Bank of Bravos account, that's where you want to go to confirm that you're paying the right account. And so by allowing anybody receiving this verifiable credentials to instantly go and verify the details, we've essentially solved everything, right? It's a secure document. It's got, cryptographic payloads and backend systems that provides multiple security layers of the information in the document. It is self-service, so there's no time to generate the thing, or it can be simply downloaded, and anybody receiving this could simply go to the Bank of Bravos in this example portal to view and confirm the details. Think about it this way: if all the banks in the world have used verifiable credentials, we wouldn't need account validation, and we would have reduced the risk of fraud, dramatically.
Excellent. So protecting our layers. That brings us to our final poll question that should pop up on the screen. And it is select the single answer. What is your biggest challenge in preventing B2B fraud? Keeping up with evolving fraud tactics, all the way down to other, or I'm unsure. And there's some questions about specific products and prices. We'll leave those for individual follow-up, but thanks for asking those. There's a Q&A question too. It says these factors are definitely necessary to prevent fraud, but do you see the same problem that I have, in which people get fatigued with a number of different two-factor authentication methods across multiple banks and platforms, and it results in complacency? I would say so, right? Your phone's constantly buzzing with the two-factor authentication or the authenticator codes. That can result in some complacency of mind, but you're certainly following the process because it won't let you advance beyond that. But that's certainly a challenge as well. All right, I'll just say this with a few questions just from the sake of time. Number one answer, keeping up with evolving fraud tactics, 4 out of 9 selected that, or 44%. A quarter, employee susceptibility to phishing and social engineering. Very good. And again, this is forced choice. What's your biggest challenge? And then we've got other, unsure, and then a couple at 7%, lack of internal resource or expertise, difficulty in implementing fraud protection technology. Awesome. Okay, so then we turn to beyond signatory rights. Nithai, could you talk us through this idea? There's banks are open to lots of channels, right? Phone, portal, file transfer, visits, paper originated items, etc. And they all go, and they're all used to originate payment somewhere else. Happy to have you talk us through that.
Yeah, so I think the main issue here is that there's like a visionary wall between, like a imaginary wall between a corporate client and a bank. Even if you're not a huge corporate, you're typically managing your beneficiaries in some sort of an ERP system, an operational system, or something of that nature. And uh, the corporate has knowledge of all, who am I, who my beneficiaries are, what payments did I authorize, what payments do I want processed, and so on and so forth. The bank does not. In some cases, clients will maintain templates within the bank and notify the bank of, beneficiaries this way. But if you're an organization with 10,000, 50,000, or 100,000 entries in your master vendor file, your bank doesn't know about that, right? They encounter a beneficiary when they process a transaction. And as you said, the transaction can hit the bank through any of these channels, right? For corporate customers, files and online banking would be the biggest one, but checks definitely, sometimes a phone call, as we've discussed before. Somebody comes to the branch and instructs this. And the fundamental mechanism for the bank to say, can I process this transaction, is credentials and signatory rights. So if I receive the transaction allegedly from the correct location and they have the right to authorize the payment, I can process that. But we've seen in some of the examples that we've discussed that that's not the case oftentimes. And so the need to dive deeper into the specific transactions is right there. And in my mind, the concept of positive pay, starting with positive pay for checks and others, is to look beyond just credentials and signatory rights. It's not just to trust who I received an instruction for, allegedly, for example, who signed a check, but also, are the specific details valid? Is the specific transaction valid? So what we mean by this is the ability to enable a bank to look at each transaction process, regardless of channel and regardless of payment rail, ACH, SWIFT, if you operate in Europe over SEPA and so on and so forth, the ability to confirm that the corporate client that issued this transaction actually wants to pay this beneficiary as a valid beneficiary for the client in this transaction at this time, at this amount, at this destination, and such. So it's a shift from just trusting the source and signatory rights into actually being able to look at the specific payment instruction. Very critical. And
This, go ahead.
yeah, and I think everybody is probably wondering, so how can this be done? Or in my mind, one of the key items is it needs to be automated and as seamless as possible. So we want to be able to do these things without having to burden bank clients into defining, white lists or blacklists, into authorizing each and every transaction. And so the key here would be the ability to have data automatically synchronized between the client's data systems and in next-gen positive pay service. Payments should continue to flow to the bank the same way they do today. No change there. If you're sending files, continue to do so. If you're introducing payments through online banking, by all means. But now the bank has the opportunity to verify that the transactions they process are indeed valid for the customer, right? It's not just that the bank account ownership was confirmed, because maybe we're paying, a good bank account and the owner is okay, but if the the originating client never intended to pay Acme Inc., then what do I care that this account actually is owned by Acme Inc.? So it's multiple layers of additional security that really dives into the data.
Yeah, it's not just sending, criminals don't necessarily want you to send all the money to their account. They want you to send it to an account that they control till they can exit out of the banking system. So thanks for that that explanation as we head towards the final stretch towards the end. The slide's threats answered. What is going on here? What are the potential frauds that exist of people getting in the way? And that idea of out-of-band validation, we showed the triangle before. Here it's shown as a rectangle, but there's this out-of-band validation from start to finish between the bank and whoever's getting paid. I'm going to talk about one thing here, the second from the bottom, payment file tampering. Payment files, if you send a payment file and you validate the count and the amount, and someone tampers with the file, if the totals match, the file can still go. Banking information has changed because there's not, in many payment systems, there's no hashing that will show that the file has been tampered with. So once it's been created, there can be alterations in a number of environments. It can be that it's placed on a server. Maybe there's a scheduler that picks it up. Someone stops the scheduler, takes the file, manipulates it, turns the scheduler back on, drops it back into that server. It gets delivered to the bank. There's an out-of-band amount validation that confirms that the file totals look good, yet the elements within the file are not what was really intended, and therefore can go the wrong way. And so this out-of-band validation process is crucial to make sure it's out of band and far enough back into the process to capture it. So that's just one area of getting in the middle, the man in the middle attack, or the manipulating man in the middle who manipulates the files is one area. Nithai, I know there's a number of things to talk here. I'll invite you to cover whichever ones you'd like.
Yeah, so I think we need to look at this entire chain as what risks exist when we're still within the corporate environment, what risks exist when the bank processes payments, and then what risks and vulnerabilities exist kind of like in the connection between these. And unfortunately, each of these line items that are listed here could potentially be a risk in multiple categories that we've just outlined here, right? So you talk about stolen credentials. We have crazy statistics about unauthorized users gaining access to your ERP system. How can we prevent this? We've shared some stories about or cases where stolen credentials were used to inject fraudulent payment into the bank's online banking system. So by creating this visibility and closing the loop between whatever happens within the corporate environment and the bank, we can prevent stolen credentials from impacting throughout the procure-to-pay chain all the way through to the bank. Social engineering, we've talked about impacting within the corporate environment. The same thing happens when bank employees, unfortunately, can be manipulated, and we've shared one use case with $35 million. Insider fraud, human errors, could happen within corporate environments, could happen within the bank, processing payment transactions for clients, and so on and so forth. So the bottom line is, if we could dive deeper into the details and not just who am I getting instructions from, we can prevent unauthorized payments throughout the chain.
That brings us to our 4 final thoughts. Clearly, everyone's been patient. We've shared a lot of information, a few new ideas, a few expansions on ideas that you're familiar with. But let's go through these. And Nithai and I decided to alternate back and forth as we step through these.
So I get to go first this time and have final thoughts on the evolving fraud tactics. And I think the poll results of one of the previous polls actually helps me summarize this thing, right? Everybody said that the most challenging thing is to keep up with the evolving fraud tactics. And so that would be, my final thought. It's a never-ending story. Technology evolves, and unfortunately, cyber criminals are like, amazing organizations. They're very efficient. They're well-funded. and they invest a lot in trying to steal our money. And so they use continuously evolving sophisticated tactics to do that. And if it was email, now it's over the phone and over video conference with deep fake AI. And if it was, let's try to get into the bank and run out of there with a bag full of money, now it's targeting data within the corporate environment, within the bank, and within the connection. So being aware of that and trying to address this is the most important thought that I have on.
Yeah, the second pillar here, the second final thought area is stronger payment controls. It could be more payment security layers. It could have said protect the additional security layers. And so this is the idea that we want layers and we have to protect those layers. Layers of security are essential. A bank letter is a great additional layer. Well, we have to protect those. Same thing with electronic items. You have to make sure that those are protected and can be validated and verified start to finish so that it wasn't compromised partway through the process.
So we'll move to technology. The one thing I'll leave you with is security is about risk management, right? It's not just about preventing all types of risk. There needs to be a good balance between security and the risk itself, and some risks we need to accept. And that's why some of the bullet points there would say, be deterministic, because if you're going to create an alert for every suspected anomaly, you're going to be bombarded and you're just going to turn the service off. AI can definitely help in addressing some fraudulent activities, but not in terms of identifying, hey, it's the first time you're paying a client. Automation is key. Nowadays, we could do things that we would have not been able to do by using automation, and obviously real time, very important aspect of things.
Yeah, and finally, this collaborative fraud defense. We only listed banks and corporates needing to fight together, to work together, to provide a defense together. But it also includes, it certainly includes consultants and fintechs, two of whom are speaking to you today. Everybody needs to work together to provide a stronger environment, and stronger partnerships enhance security, because both ends, or everybody in the middle as well, if they're working together, it provides a tighter, stronger defense, and those are necessary. Nithai, I want to thank you for collaborating on this presentation today. Thanks everybody for joining us. We really appreciate you spending time. And I'll turn it back over to Brian, who has a few quick announcements. Thank you, Nithai. Thank you, everybody.
Thank you.
Thank you, Craig. Thank you, Nithai. And thank you, everyone, for joining us today. The CTP credits, today's webinar slides, and a recording of today's webinar will be sent to you within 5 business days. And for more on stewarding cash well, be sure to download the Leading Practices in Treasury ebook by clicking the link in the chat box. Thank you, and we hope you have a good rest of the day.